let's say you're going to elect mark-to-market for 2010 or for the 2010 tax year, which would be next year's taxes. You would make this election, attach that statement to your taxes before April 15th of next year, and send that in with your tax form. And then you're making the election to file as mark-to-market. You then file Form 3115, which is change of accounting method. This gets filed later. This is actually filed on next year's tax return for 2011. So it would get filed in 2012 if you're following my timeline here. Then you make a Section 481 adjustment on the Form 3115 and on the tax form of 4797. I know it sounds complicated, but I think it sounds a lot more complicated than it truly is. So I've got the example right up here. So to attach the election statement to a prior year's tax return, to elect mark-to-market for 2011, you're going to attach and send in with your 2010 tax return by 4/15 of 2011. If you have any questions, my contact information is at the end of the presentation. You can email me, and I can help you with this. An example statement would read something like this. I hereby elect to use the mark-to-market method of accounting under Section 475F of the Internal Revenue Code for my trade or business of trading securities. The first year for which the election is effective is the taxable year beginning January 1st of 2011. That's in essence all you have to say to the IRS to inform them that you're making that election going forward. Form 3115, the change of accounting method, that needs to be filed with your 2011 tax return if you elect mark-to-market for 2010. Yeah, any open positions on January 1st of that year, 2011, then you're going to calculate and report on Section 481 an adjustment. In other words, you got to adjust those as if you sold them, and then if you've got unrealized gains from that adjustment, then you get to prorate those over the next 4 years. And if you have unrealized losses from that adjustment, those are actually 100% deductible. So that in essence covers a little bit about mark-to-market. That's I think is one of the huge benefits of being able to claim trader status, is being able to elect that mark-to-market accounting. As you can see, being able to take capital losses into ordinary losses is truly beneficial on your tax forms. So let's look about let's talk for a minute about entities for traders. If you claim trader status, you're in essence a sole proprietor, and you would operate under a sole proprietor. And if you've heard me talk a bit ago about a Schedule C, that's where you would record all of your expenses for your trading business would be on your Schedule C. Some go out there, it makes sense to go out and create incorporate and create an entity for your trading business, and we'll talk about why you might want to do that. If you're a part-time trader that does have W-2 income, a corporation can help you as far as claiming, solidify your case to claim trader tax status. If you miss the mark-to-market election, in other words, if you filed your taxes and you did not make that election for mark-to-market, what you can do is then form a corporation and make that mark-to-market election with that corporation for the remainder of the year. For instance, let's say April 15th rolls around and you already filed your taxes, you did not make the election. You can then incorporate and make that election for April 15th through the remainder of the year and take mark-to-market accounting through your corporation. The first 4 months of the year you would be taxed as a sole proprietor, which we talked about earlier, then the rest of it would be under mark-to-market. Some other reasons why you would want to incorporate is to be able to deduct health insurance premiums, which we'll talk about here in a second, and retirement plan contributions. The benefit of having an entity is if it's your only income source, which I'll talk about here in a second, if you don't have earned income, you're not allowed to deduct health insurance premiums, and you're not allowed to actually contribute to retirement plans. So we'll talk about that in a second, of how you can engineer earned income. The other reason that people want to incorporate is for audit paranoia, which I'll throw some statistics up right here. These statistics are as of 2008. All the tax returns filed for 2008, 1 out of 100, or about 1% of the tax returns, were actually audited. If you look at Schedule C, which is where you would be filing your trader status if you did not incorporate, Under $100,000 in income on Schedule C's, you're 400% more likely to get audited than if you were incorporated with an S Corp or an LLC or a partnership. If you're making over that amount in your trader business and not incorporated, you're 1,400% more likely to get audited. The IRS really kind of hammers in on Schedule C's and as far as their audits. The incorporated S Corps, LLCs, partnerships get audited at a much lower rate. So that's one of the primary reasons of why you may want to consider incorporation, is to get rid of some of that paranoia you might have about getting audited. The two other reasons that I think I mentioned is health insurance premiums and retirement plans. So just kind of looking at those two. Health insurance premiums. Insurance premiums that are not deductible from your adjusted gross income. I'm sorry, insurance premiums are not deductible from your adjusted gross incomes if you don't have earned income. They can actually get added to your itemized deductions for medical expenses on your Schedule A. And to take that, it's limited to over 7.5% of your AGI is the only amount that's deductible. So to put that in perspective, if you have $100,000 AGI, the amount that you spent on health insurance premiums and other medical expenses, the amount over $7,500 is deductible. So if you had $12,000 of expenses, medical expenses, including your insurance premiums, you'd only be able to deduct $4,500 off of that. If you create earned income through an entity, that's going to make those health insurance premiums deductible dollar for dollar. So that $12,000 expense, you're going to be able to deduct that entire $12,000 from your taxes. So that's a huge benefit and something that you may consider doing. So what you have to do is pay yourself a service fee. This is where we talk about creating earned income from your corporation. You pay yourself a management fee in that respect, service fee, and that you're able to pay income taxes on that. You will pay income taxes on that, and that creates the earned income that you can use to then take the medical expense. One of the rules of caution there I put up there is you cannot be eligible to participate in a spouse's health plan. You're not going to be able to do this if your spouse actually works and they have a health plan available through their employer, a discounted health plan available through their employer. This isn't going to apply to you. So retirement plans. Retirement plans, again, no earned income, no retirement plan. You can't contribute to a retirement plan unless you engineer income from your trading business. You have to also have earned income to be able to contribute to Roth IRAs and traditional IRAs. Earned income can be from you or your spouse. So if you have a part-time job or if you have a job other than trading or your spouse works, that is earned income, and then you would be able to contribute to Roth IRAs, traditional IRAs, etc. And again, it gets back to just like in the health example of paying yourself a fee from your trading business to generate that earned income. That opens up a lot more doors for you as far as tax deductions and things like that with retirement plans. The best entities for traders are going to be pass-through entities. What this means is that the gains and losses are not taxed at the corporate level, but they're passed through to the individual or joint tax return. Examples of these would be partnerships, S Corps, and LLCs. You've also got C Corps, and I don't recommend C Corps for a trading business because you're taxed twice. You're going to be taxed at the C Corp level, then you're going to be taxed at the individual level, and the losses are actually contained within that C Corp. You can't pull those down to your individual tax return and offset other income. So those aren't really recommended. I'm not going to go into a lot of detail on partnerships, S Corps, LLCs. That would be an entire webinar in and of itself. But if you have questions on that, you can view my website. It's got some great information on S Corps, LLCs, etc. And I'm always available for questions on those as well. I think we're doing pretty good on time. Let's look at some of the frequently asked questions. These are probably some of the ones that you've had with trader taxation, and hopefully I'll address some, and I think we'll probably have some time at the end to take a few questions as well. Capital loss carryovers. I have a lot of capital loss carryovers. If I elect mark-to-market accounting, can I use them against future trading gains? And the short answer there is going to be no. Capital loss carryovers can only be used to offset capital gains. Electing mark-to-market accounting creates ordinary gains and ordinary losses, and only ordinary losses can be used to offset those gains. And hopefully that makes sense. What would happen, I've seen trader cases where people have not elected mark-to-market accounting in their trading business because they do have a lot of capital loss carryovers that they need to carry forward, and they're expecting to get gains in their trading business, and so they don't elect mark-to-market because it wouldn't offset those gains. But that can be a mistake, because if you generate future losses on there, again, those are going to be tied in there, and you're not going to be able to take the full extent of them. So everybody's situation is different. That's something that you might want to think over. I also get this question: am I responsible for self-employment tax? The answer there, only on earned income. So traders are exempt from self-employment tax and payroll taxes because the IRS views trading gains as unearned income regardless of trader status or the mark-to-market election. The two exceptions there are prop traders who get a 1099 miscellaneous. So if you work in a prop firm and they actually issue you a 1099 miscellaneous form in January, then you are going to be responsible for self-employment taxes. Or if you're a future trader and are a member of a dealer or a member of an options or futures exchange, then you will be responsible in the IRS's eyes for self-employment taxes. How are future contracts taxed? Futures contracts, and this is for those of you that trade E-minis, the ES or TF. I know Jennifer trades TF quite a bit. These fall under IRC Section 1256 contracts. This is why I talked before when I was talking about mark-to-market, where mark-to-market makes a lot of sense for securities traders, for stock traders, for options traders, bond traders, etc. If you have a profitable business trading future contracts, then I wouldn't elect mark-to-market accounting. And the reason being is that falling under Section 1256, your trading gains are taxed as 60% long-term and 40% short-term automatically. There's no special election that you've got to make to get that taxation rates. So that current rate, and this, even if they extend the Bush tax cuts, it's going to stay the same. The current max rate with a 60-40 breakdown is going to be 23%, whereas if you elected mark-to-market accounting and you had those gains and you're at the max rate, you're going to be taxed at 35% on those gains. So that's a 12% difference, a huge difference. And if you've got a profitable trading business, then I wouldn't suggest that, because you're just going to end up paying more in taxes. With the 1256 contracts, you can carry back trading losses up to 3 years, but only against other 1256 contracts and their gains. So if you're trading E-minis and you've got losses on the E-minis, you can take those losses back up to 3 years, but it's only going to offset other gains that you've had on E-mini contracts in prior years. So as I said, profitable future traders usually skip electing mark-to-market accounting because of the tax advantages that are already inherent in those contracts. Forex. Forex is taxed. The default taxation under IRC Section 988 taxes Forex as ordinary income and loss. So it's kind of the exact opposite of the future contracts. Forex is going to be taxed as ordinary income and loss, so you don't have to elect mark-to-market accounting there. It's already taxed that way. Ordinary losses offset income of any kind, as I talked about earlier, and you report these gains or losses. You're going to actually report on line 21, and it's listed as other income on your 1040. Futures on currencies, if you've got futures on currencies and you're trading those are actually considered 1256 contracts, and it gets that 60-40 capital gains rate, as I talked about previously. And traders, you can actually opt out of Section 988 if you want to. You can opt out of the 988 and get taxed as a Section 1256 contract if you're trading Forex. You get the 60-40 tax treatment, and that is not available if you take physical delivery of the currencies, which I don't know many traders that actually do that, but that's not available there. What if I trade stocks and futures contracts? Okay, well, the dilemma there is, do you elect mark-to-market and have to have your future contracts taxed under mark-to-market rules? You don't have to do that. You can elect mark-to-market accounting for your securities business only, and you can segregate your futures account, and that's what I would advise you to do, is to have separate accounts. Maybe have your securities business at one brokerage and your futures business at a different brokerage, so you can demonstrate to the IRS that you have those businesses separated, and you can elect mark-to-market accounting for your securities business only. So that would hopefully clear that question up for you. The other question I get is, can I still hold long-term investments? And yes, yeah, I talked about one of the cases, one of the tax cases earlier, where they actually lost their trader status, and one of the reasons was they were investing in fixed income securities. They invested in treasury bonds, they invested in dividend-paying stocks, et cetera, and I think 98% of the income that they generated was from dividends and interest, and it wasn't from trading. So you can see why they lost that trader case. It doesn't mean you can't invest in those long-term securities. Same as I talked about in the previous slide, just segregate that business. Keep them in separate trading accounts, or keep them in separate accounts, so that you can demonstrate to the IRS that those are separate businesses, and you can definitely hold long-term positions, and it doesn't affect your trading. What would happen is your long-term positions would get taxed at capital gains rates, long-term gains, short-term gains, et cetera. Capital loss rates, those would be there. That would be on that book of business, and your other business, your trading business, and you elect mark-to-market is going to get taxed in the ordinary income rates. And again, I said separate account, and it should not be titled in your business name if you incorporate. So if you have XYZ trading business, don't hold your long-term positions in XYZ trading business. That can cause problems if the IRS takes a peek at that. That gets into how should I title my accounts. Sole proprietors, so if you are a sole proprietor business, you should be trading in individual accounts. If you are a sole proprietor and you are trading a joint account, you could potentially, in the IRS's eyes, you could potentially be having a partnership, and we require you to, if you can see on the bottom slide there, Form 1065, which is a partnership tax return. That could or could not work to your advantage, but just be aware that if you are trading joint accounts and you're a sole prop trader, then you could end up having to have a partnership with your spouse and have to file that partnership tax return. Incorporated trading businesses should be in the name of the business, not in your individual or joint name. So if you do incorporate XYZ trading business, you have to title your accounts for that trading business in the name of your business. Don't keep them in your individual or joint accounts. You got to title them over so that you can demonstrate that this is your trading business in the IRS's eyes. So what to do next? Just some final steps here. I think we're almost done with this, and I can open it up for some questions. What to do next? Next steps is fill out and submit the trader evaluation form. If you're not sure if you qualify for trader tax status or not, please go to my website. You've got the form. I think Fari's going to make it available on Ham's Analytics, where you can see it and download that, fill that out, fax it in, email it in to me, and I will review your situation and let you know if you're going to qualify or not. So it's not too late to claim trader tax status for 2010. You just won't be able to claim mark-to-market accounting. You would do that on next year's return, but we can submit a Schedule C and get you get the deductions that you're going to deserve for trader tax status. If it's new and you felt that you qualified for prior years, we can go back with amended returns and claim trader status for those years. I said you don't need special forms or elections to do this. It's just basically filling out a Schedule C, profit and loss from a business, and that's going to take care of that. Prepare yourself to make the election for 2011. If you want to find out more information on mark-to-market accounting, if that's going to make sense for you or not, I'm available for questions on that at info@shrinkmytaxes.com. So how can I help you, or how can Shrink My Taxes help? I mentioned the free trader evaluation. I can review your previous 3 years of tax returns for free. So if you felt like you qualified for trader status for the previous years, I can go back and review those, make sure you're getting every deduction that you're entitled to. I can help you with the mark-to-market election, filling out the proper paperwork, getting the forms in on time, making sure that everything runs smoothly there. If you're considering an entity consultation and formation services I provide. Formation services are right off my website, and it's pretty inexpensive to form an entity, but we'll make sure that you get the right one for your situation and make sure all the proper forms are filled out. If you do get an entity and need payroll services, we do those at Shrink My Taxes. Of course, tax preparation. We do S-Corps, LLCs, partnerships, individual and joint returns. There's nothing out there that we haven't seen. Tax planning and tax consultation. And the other thing I throw out there is that you have unlimited access to me, which is included. If you're working with us on tax prep or entity formation, things like that, we're available to answer questions. I don't charge by the hour, so you don't have to watch the clock there if you have questions or concerns or want to go over some things. We're always available to help out. I'll finish it up by saying just a quote that I thought was summed up everything pretty nicely, and this is from Arthur Godfrey. He said, "I'm proud of paying taxes. The only thing is I could be just as proud for half the money." And I think that sums up about how most of us feel out there about paying our taxes. I appreciate everybody's time tonight, and there's my contact information. You can reach us at 877-62-NO-TAX. That's a toll-free number. My fax number is listed there. It's on my website as well. I'll give you my email at info@shrinkmytaxes.com. The website is www.shrinkmytaxes.com, and my Twitter handle, if you can follow me on Twitter, is @shrinkmytaxes. So that's all I had for this evening.